episode of Beating Alpha. This is episode 142, and we have a very special guest. His name is Ross Yager. So a little bit about Ross and the things he's working on. So first of all, he's an engineering professional based in San Francisco Bay Area. So anybody who's watching from San Francisco Bay Area, make sure to get in contact with Ross. And of course, there's going to be social media links for that. So now he recently moved and put his focus in the real estate industry. His interest is leveraging his professional income outside of the traditional and risky stock market, and non-liquid 401k has allowed him to take charge of his future through passive income real estate sources. So again, he currently focusing on the acquisition and management of single family and multifamily properties, accumulating approximately $1 million in assets under management with over $100,000 annual revenue in just under 1.5 years. So currently invests out of state, and he said the two markets that he's focused on is Texas and PA. I'm guessing it's Pennsylvania. Hopefully, who knows? And also provides mentorship to others seeking guidance in remote investing. So there's going to be a lot about real estate and particularly how do you invest and manage properties remotely. But Ross, just want to say a big thank you for coming on the show and sharing all the wisdom.
No problem. It's exciting to be here.
Thank you. Thank you. So I'm happy to have you on. So first of all, PA, is that Pennsylvania?
You nailed it there. Yeah. So
I'm not from States. I don't know.
I know. I realized that after I put that down. But yeah, so I've mainly been investing in kind of the Fort Hood area in Texas, and then in the Philadelphia metro area out in Pennsylvania. A majority of my properties are in the Philadelphia area, so that's the higher concentration of it. But reached out and started in Texas for some cash flowing assets out there this summer to diversify a little bit, and because of the boots on the ground that we have out there.
Mm-hmm. So talking about, again, your personal, because you're coming from engineering, you're an engineer professional, and you're from San Francisco. So for the people who are not familiar with the San Francisco, market, real estate market, can you just give, your thoughts and ideas? Why have you chose to invest, in those states, which is Texas and Pennsylvania, which is remote investing? Because most of the time, when you talk with real estate investors and somebody who's looking to get started, the first advice that they get, buy a deal close to you, but you did kind of the opposite thing. And can you explain for what reasons?
Yeah, exactly. You can get a clue of this from the background of my screen right now. I'm in a pretty small little office that has some bikes on one side and some other storage the other place, and then I got my work set up in here as well. So area is definitely a premium out here in the Bay Area. It's one of the most expensive real estate markets in the world, and it's just continuing to be that way ever since I've been out here. And so from my perspective, originally it was just too much of a financial burden to take something like that on. But as I've continued to grow my financial income and kind of cash flow there and net worth, that has been starting to be more of a possibility. But it's just something that my wife and I have chose to kind of hold off on at this point, so that we can focus on higher rate of return income producing assets outside of the Bay Area. So because it's such a high expensive market, it's really hard, if not impossible, to have cash flowing assets out here. Mm-hmm. And so you're really just banking off appreciation at that point, and you're also, that brings with it a high down payment that you need to bring forward as well. And then from my perspective, I've just seen that as an opportunity cost that I can't invest elsewhere. And while it's a fairly low risk in this area where you're pretty certain that you will get appreciation, I still think that you can have less risky with higher returns, on other cash flowing opportunities. And so we've kind of house hacked in a way where we found an apartment where we love it. It's in a great area. We've had it for 5-6 years. We have rent control, so our rents have stayed quite low throughout this whole period of time relative to, so I guess the flip side is with the high expense area comes a premium on, salary and income as well in this area. We have Silicon Valley and, a lot of the big tech companies out here. So you usually get a premium on kind of salary and income. And so if you're able to kind of hack the housing situation, you can really kind of take advantage of both worlds there. So that's kind of what we've been trying to do, and then focusing that the extra income that we make from those savings and additional income into cash flowing assets outside of the state.
Got it. So again, talking about San Francisco, I just pulled up a website. It's called Business Insider. I'm sure there's a lot of people familiar with it. And it's because I just wanted to check and see what the rents are. And it says the 25 most expensive cities around the world to rent. And it's talking about 2-bedroom apartments. So, and the first, guess who first came up? Of course, it's San Francisco. So the price is $3,600 per month for a 2-bedroom apartment. So people who are listening thinking like, oh my God, it doesn't make any sense. But again, so like you made those decisions to move to other markets. And of course we can kind of cover why have you made a specific move on these specific markets. But one thing that I wanted to ask you before you kind of decided to make a move on real estate, have you looked on at different options, you know, like, because again, you mentioned there's the Silicon Valley, there's all these kind of startup companies. So why not go and start your own business or invest in a startup company, be a kind of angel investor if you have the, you know, access capital to do that, or maybe do different things, maybe, you know, create an app or a gadget or something, you know, why real estate?
Well, first of all, I actually do work for a startup out here as well. So
There you go.
the company I'm at right now, Skydio.com, you can take a look to see we build autonomous drones. We build robotic drones that are able to navigate the world autonomously. And yeah, we're currently a startup, but things are going very well there. It's a really exciting place to be, and I see a very exciting future for them as well. So that's kind of my like hedge in the startup world that I currently have. And then I also have over the past, I guess one of the reasons I have gone towards real estate is it's very entrepreneurial in nature if you are doing kind of the actively buying and purchasing of houses. And that's something that I've historically enjoyed and been good at. I've done several different Kickstarter projects before, early when it first started coming out, where me and a fellow engineer, we basically started our own little mini company where we did some Kickstarter projects. In fact, here's some of I have some of those demo projects in here right next to my desk. But awesome. So yeah, I mean, I definitely like the entrepreneurial and you know, try to take advantage of the tech tools that I have and know there as well. Real estate's just kind of like a way to diversify outside of that, and then also to have a cash flowing business that I'm able to do while at a startup as well. The startup environment generally is pretty time heavy, and so I used to work at a bigger corporation. That's kind of when I did more of these kind of side hustles, technology side hustles. But as I've kind of been, more of my time has been taken by the startup, I've also, you know, trying to continue to have a side business while being able to continue to put the time that's needed to my primary company.
Mm-hmm. Got it. Good. Okay. So kind of have to, somebody who's looking to get involved, they have to have a clear why, of course, why they're getting into business, but some entrepreneurial spirits that will go along that will be good as well, right? And that's, of course, that's not inherited. What do you think, you know, just kind of in between question, you can, you know, answer yes, it's kind of yes or no question, but do you believe that entrepreneurship is kind of inherited thing? It's like through DNA, or people can become a successful business, you know, owners?
Yeah, I mean, I think I like to believe that anyone can kind of rise to that and learn that. I think there are definitely inherent things that can make it easier for someone to kind of step in that type of role. But I think with the right education, the right mindset, that anyone can kind of step in that type of a role. And I also want to make clear, like, investing in real estate does not have to be a business. And that's actually a lot of the people that I end up kind of like helping mentor and coach through these things. A lot of times that's kind of the first question that I try to ask them is like, it seems sometimes very sexy to like, oh, I own like 10 properties and, you know, like I'm a landlord and I have this, you know, cash flow income. But like at the end of the day, if it's not making money, it's not so sexy after all, even, and, you know, and that becomes a hobby. And so what I try to get people to really think about is like, at the end of the day, you really got to be tracking all your financials and, you know, like everything, you know, what's your actual return on everything and the amount of time you're putting into it. And if you're not actually making returns that you can get elsewhere, then don't do it. There are a lot more passive ways to get into real estate, you know, to like participate in similar levels of return in real estate without having to actually be the landlord, own all the properties, do rehabs, et cetera. You know, like there are a lot of syndication options out there. There's REITs. You start to basically reduce kind of some of the returns that you can participate as you kind of go out in that space. But there are definitely ways that you can participate in that without having to be doing all the work yourself. So I guess for people who are always thinking of hopping into like doing their own real estate and buying and fixing houses and being a landlord, I'd say step back. What are your real goals? Make sure that it's not just going to be a hobby and is actually an investment where you are going to make the returns that you're targeting.
Mm-hmm. There you go. So the answer is yes. Anybody can become a successful real estate investor, again, through the courses, the podcast, the mentorship. I mean, all these different pieces that now are available. And it's not only for the super rich that can go and invest into these multifamily deals, because those deals used to be closed off before, you know, we used to go from hands to hands, you know, and in a private, you know, small groups. And I was like everywhere, and everybody can get access to those type of deals. So talking about the deals itself and probably, you know, about the markets, can you talk about why have you chose Texas and Pennsylvania? For what reasons? I mean, there's 50 states available. So why those two states? And are you personally looking forward to moving maybe to one of these states because of the tax advantages, let's say?
Yeah, so I'm always looking for different markets to go into, and yeah, I definitely think there are some very good candidates outside of, you know, Philadelphia and Texas as well. I think the main thing though is that it really matters like the team. Well, first of all, like my higher level criteria was it had to be a cash flowing area. So basically, you know, when you buy the property and you can get a mortgage on it, your mortgage, insurance, property management, all your expenses need to be covered by the rent, the market rent that you could get from that. And then obviously, ideally, you have some sort of amount of cash flow on top of that is a monthly profit. In fact, I wouldn't do it if it's not that. But so that's kind of like the high level goal. And so then you kind of that kind of whittles out quite a few different areas, especially with kind of how hot some of the real estate markets have been in various areas. So typically, like when you're seeing house valuations in the 150 or 100,000 to 200,000, 250K range, that's where you can typically kind of see some of these cash flowing markets. Philadelphia has been kind of a unique one in that it's also been appreciating quite a bit as well. So I kind of consider that icing on the cake from that perspective. But so that's kind of why I ended up looking at Philadelphia first place. I also ended up like having a connection out there as well, which was really key. So once I was able to identify that, okay, Philadelphia is a place where it's a very rent strong area with still very affordable housing. That made it for a right spot for kind of getting into it. And then outside of that, the most important thing is your team. So you need to be able to trust people, especially as a remote investor. So as a side note, I didn't see any of the properties that I purchased for about a year and a half after I purchased it. I went out recently, back just before COVID started, actually, where I was able to kind of tour all my properties and actually see them for the first time, but which a lot of people think is crazy. But I'll walk through kind of how I mitigated some of those risks. But yeah, so that's kind of how I chose it. I was able to put together a super strong team on the ground, and one that I could trust. And then from there, it was a matter of like finding great deals, and then ended up doing like rehabs on those. You might have heard the term the BRRRR method, which is basically where you buy, renovate, rent, get the property rented out, and then refinance and repeat. This is kind of the acronym there, but the idea is that you basically force appreciation, that would cover whatever amount of down payment you would need for the mortgage, and then you're able to fully cash out refinance your initial investment. You take that and then you go do this again, and that's called the Burr method. And so that's a way that a lot of people have been able to kind of build some financial success without having to like continually save enough to buy a new house. So that's one of the tools that I've used and has been very successful with it.
Got it. So again, for the people who are watching or listening to this episode, can you talk about, again, because, like Philadelphia, we're talking, like it's crazy because you're taking plane rides, you're not driving with the car to those properties. And how often do you go to these properties and visit them?
Yeah, I visit usually, well, COVID, I plan on visiting twice a year, but at this point, I just have gone once a year for the past 2 years. But yeah, so I've managed it purely remotely. One of the key things that allows me to do that is I have a property management company. I pay them a certain percentage of, the monthly income, and basically they're my boots on the ground. They're the ones who handle all of the maintenance requests, any sort of like with COVID, dealing with any sort of difficulties with rent, dealing with the city, pretty much handles everything from my perspective, which allows me to be very hands-off and spend my time where it's more valuable, which is in the business itself, and then in my day job. So the goal here is to make it as fast as possible, and that's one of the advantages I think of starting a remote investing, is that it kind of forces you to automate and put in process as much as possible. Whereas, and that ends up allowing you to really save time in the end, right? Because you're forced to build a scalable business from the start. Whereas if I were to go, house hack in my backyard, it kind of makes sense for me to do all the work and like save that extra money each month, because why pay someone to manage my properties when I'm right there and can do it? But so I guess it's very easy for you to kind of like take on that work to save a little bit of the extra cash, when in my opinion, that's actually better spent on paying someone else to do it and then using your time in a more valuable space to scale the business. So I've actually found that remote investing is kind of a great way to learn how to build a scalable business kind of by force.
Well, I mean, like in that case, if you're owning properties in, Philadelphia, I mean, it's physically impossible for you to be in these properties and manage them. So you kind of have no choice just to hire a third-party management, to run the properties and the operations on a day-to-day basis. But can you talk about, again, first of all, when it comes to, assets under management, what is the current number that we're talking about?
Yeah, so I'm just actually closing on 2 different properties, another triplex and another potentially duplex. So assuming those get closed, we'll be close to 1.3, 1.4 million range at this point. And so in terms of like total valuation, and then that will bring the annual revenue up closer to the 130, 140K per month, or per month, not per month, I wish per month, annual revenue. So that's been something that, yeah, I mean, that's the goal. So, yeah, so that's where I'm at currently. And that's a total of 15 units across 10 properties.
Okay, so 15 units across 10 properties. So which one is the multifamily, and in which state it is?
Yeah, so we have, I have a couple. So I have a triplex in Philadelphia, potentially this duplex, and then another duplex in Philadelphia. And then I also have 2 duplexes in the Texas area. So that's where the discrepancy between properties and units takes place there.
Got it. Okay. So talking about the day-to-day operations, and again, maybe you can take us through the process, which of course, as I do understand, it's a kind of crucial piece when it comes to investing remotely, is to vetting potential property management. So can you give us some ideas, clues, or strategies how somebody can go about manage one?
Yeah, I mean, it's absolutely imperative that you have a great team on the ground. You can really get screwed over by that if you don't do that. So that's one of the really important parts. The way I ended up doing it originally was I got in with a group that did more of a turnkey approach. So they would effectively, so they're, for those of you in the audience who don't know, there's kind of a turnkey real estate approach where you can do. And the idea there is that some other builder or, property management group will purchase a property, fix it up, get it ready for rent.
It's a wholesale deal.
They will get a renter already in there, and then they will then sell the property kind of as this buttoned up rental ready package. And then you end up paying a premium for that. But you're getting it with no headaches and no headaches, but less work from your perspective, where you can just start cash flowing on day one. So that's a like pure turnkey approach. That's what a lot of your like roofstock.com. There's kind of a number of different institutional level kind of like online websites that are allowing you to do this now, which is really cool. Where you're still actually owning the asset, so you can potentially participate in higher returns. There's also higher risk there because you are actually owning the asset, versus like a REIT where your returns are going to be a little bit lower, but you're still taking part in whatever fund, like real estate pool that they own. And so this is kind of one step further than that, where I actually take on the ownership of the property before it's rehabbed or anything like that. And then they're kind of the partner who's walking me through all those steps. So they wholesaled me the property. So they found it off market, they marked it up, they sold it to me, which is a typical kind of real estate purchase model. So I was able to get a discounted property at a good price. And then I because I took on the risk of, purchasing the property before it's all ready, I'm able to, get a higher return out of that too. So I'm getting it at more of a discount than I would buying a turnkey, for example. Then they managed the construction project. So they, basically, managed all the rehab and everything like that. They ended up finishing that. And then they also own a property management company. So I did a lot of vetting of property management companies, and I had actually quite a few backups that I was very satisfied with, but key things there were really interviewing every single one with several people that work there. So I would get on the phone, I'd have a 30-minute conversation. I'd ask them different scenarios and say, hey, how would you handle this? I'd ask about what their incentive model is, because different companies do it differently. Sometimes they kind of can structure it where it feels like incentives are not as good as for like generating or like getting the renters to pay. So those are the type of questions that I asked when I got on an interview, and then also looking at a lot of reviews. We live in such a modern kind of review-based world that it really does help for these types of things as well. And then another thing is I looked at reviews of renters of the company, which I think a lot of people don't do. They tend to just look at, talk to other landlords and see what their thoughts were. But I also took a look at what the renters themselves were saying on like Google and stuff like that, to kind of get an idea of like how they handle their tenants. And that was actually pretty useful. That actually opened my eyes to one that kind of crossed them off the list, because there was just a lot of bad tenant reviews there. So those were kind of the questions that I asked. And then going back to this company, then they had the property management group, and I basically negotiated in the contract I could drop them at any point and get a refund on it as well if anything went wrong. So I basically mitigated my risk there, and decided to continue going with them as well, because it's kind of nice to have this full kind of vertical pipeline for doing all this anyway. So that's kind of the approach I took. It worked pretty well. Down the line, as I continued to scale, it didn't make as much sense to use them as a property management company. So I ended up switching to a different company earlier this year, and it's been really great transition there as well. But yeah, that's kind of how I initially got into the market. And because I was the person who kind of purchased the asset at first, that allowed me to participate in kind of the full return of what you would get if you were doing this yourself. Paid a little bit, I got a little bit less because of the process, but in general, very similar to what if I was just going and doing this on my own for the first time. So it's a pretty cool process. One of my big questions was why are you not just doing this with this property?
That's what I wanted to ask. Yeah.
Because it's wait, is this too good to be true? Why would you be doing this? But as you go along, you start to realize that how that model actually makes a lot of sense as well. they're basically mitigating their risk. They're generating like cash flow streams, as well as kind of big paydays throughout the process, and they're allowed that model allows them to scale much faster as well. So when you start to think about it from that perspective, you realize, oh, this is actually a pretty good deal from their perspective as well. So but I mean, it is good to think about these things, and you should be able to figure out why it's good on their part, because if it's not, it probably is too good to be true.
Exactly. So can you talk about, because, you know, like as far as I'm hearing, there is a little bit of risk involved, and that risk is where you actually have to go about and see if the guys who you know, who providing that wholesale process and the deal that they have, they're solid, you know, people. Because if you're talking about taking kind of this turnkey approach, where they're going to be putting, you know, contractors in place and fixing the deal, and of course there's a strict like timeline on the date when the tenants will be moving in, and they have the property management side. So how do you go about, first of all, and like come across these type of turnkey deals?
Yeah, so that's been kind of like my goal from the beginning was to find that. So I guess kind of going back to the very beginning, how I got started in this altogether is, you know, I started with my career starting to save more and kind of accruing a higher net worth. Always been investing in stocks, and kind of been pretty actively involved with that. So from a very young age, my dad got me investing, I think when I was like 12, in the stocks, and bought my first stock. I ended up selling it at like 2008, right before the crash. It was really great. I think it was GE back in the heydays, and Broadcom. And so I like doubled my money and then sold right before the downturn. I looked like a genius. I called it. No, I had no idea what I was doing. I just ended up having to time that with my school where I sold. So got kind of lucky there. But been basically, yeah, like in that investment world for a while. And just kind of started to look at like, okay, like how do we, like, I feel like I'm on a pretty successful track in my career. And, you know, like we have these startups that are pretty exciting, which could have some big ends. There's always the stock market too, which can be very great and passive, but also you definitely have less control over like what's going on there. And so I kind of started to look at like, okay, where are other like the really wealthy people doing with their money? And so that kind of led me to look at real estate. And then I took a very similar approach, what I imagine a lot of people of your audiences do, where in this world, there's so much information available. Podcasts were my thing. Listen to tons of different podcasts. I would listen to it every day going to and from work, and, you know, just continuing to learn there, and spent about a year before I even like kind of decided to take any action on that. But I think it's really important to educate yourself so that you know the fundamentals, so that when you actually do get in there, you can kind of find your way. Even though no matter how much education you do, when you hop in your first deal, it's still gonna like be very different from what you've heard on your podcast and everything like that. But it's definitely a good place to start. Another thing I did was every time I'd hear a podcast, I would write down the contact information if it was available of the whatever speaker that was on there. And then I'd reach out to them. If they were able to set up a phone call with me, I would do that. And then I'd just pick their brain. And I got a lot of connections through that, and also just some great resources too. And I suggest if you do that, make sure you really have a plan there. You don't want to waste their time. But I think if you come at it with a thoughtful approach, you can connect with some really cool people who you can learn a lot from. So that's kind of how I started getting in, and that's actually what led me to my connection out in Philadelphia for this kind of semi-turnkey approach to getting things done, and that kind of opened up the doors from there.
Here we go. So you truly leverage the power of a podcast, you know, and I definitely encourage you, you know, guys and girls who are listening to this episode or watching it on YouTube, to do exactly the same, because all those links to get in contact with Ross personally is out there. And that's why I do the shows, again, for the same reason, for people to go out there and build that network, you know, talk about the processes and the deals and the markets and the reasons why you're investing in those particular markets. So that is awesome. So talking about, you know, those current deals that you have, again, coming back to the property management side, again, we're still during the COVID pandemic. So can you talk about how the property management goes about when it comes to the rent collections?
Yeah, so we've actually been, like I said, I switched property managers to what I believe was someone who, like a group that could be more scalable and kind of better fit my needs earlier this year. And it was great timing because it was, a couple months before COVID ended up starting. But through the whole process, one of the key things is we vetted our tenants like very carefully at the beginning. And we have a set criteria that we stick to. And even though we're investing in like C-class areas, so for listeners, there's like A-class, which is your like top tier stuff, your luxury, your high-end apartments. And there's the B, which is kind of more the still very nice asset class, but not, necessarily like, like the perfect neighborhood or like the high-end luxury market. And then there's C, which gets a little bit more on the like shadier side of kind of like on the edge of gentrifying areas, things like that. And then there's D, which is like, you don't go there, like there's bullets like flying across the street as you're walking through. So I kind of try to find the line right with these B, C class areas. So they would still be considered C, but they're like maybe right next door to a B area, or you can clearly see kind of the housing values moving upward in a wave towards that area as well. So there's definitely, that definitely brings with it a more difficult tenant situation. But again, you can still have a pretty high bar there and get good tenants. Throughout the whole process from all my units, I had one unit that was unable to pay for a couple of months, but I guess 2 months ago they got all caught up and paid everything that was outstanding before that. So we have kind of an automated ACH-based auto pay for all of our tenants, and so it's which definitely helps them to kind of, whenever you can automate the process, that makes for less barriers and less places where things can go wrong, and ends up building more reliability and predictability there as well. So that's something that is key. But yeah, through the pandemic, we've actually done really well, and at this point, we have are all cut up from any sort of fallbacks that we did see. So that's been pretty exciting. And I think it does go to, like, I mean, people do value the roof over their head, like, as one of the most important things, right? And so it's definitely one of the last places where people kind of want to like skip on if they have a choice, right? So I think even though there's been a lot of that in the news discussions on like how rents can be tough, I think especially when you're in kind of the middle class area, which I think is a great class to be, because when things get tough, people downsize from A's into the middle class, and then when things go good, people come up from the lower class into that area. So it's always kind of a market where people are drawn to, whether it's a hot market or a cold market. So I think with that combination, it's been we've done really well even through COVID.
Got it. Good. Awesome. Love it. So you mentioned one thing that I think it's worth kind of expanding a little bit. You mentioned a software that you're using when it comes to the rent collections. So do you personally using any additional softwares that will allow you to kind of, observe the day-to-day operations and, from the property management side, or what's happening on these markets? Like, you using some additional softwares when it comes to, managing these deals remotely?
Yeah, I definitely highly rely on a couple of key tools. The first one, as a business tool, I use QuickBooks Self-Employed. So that allows me to it's very easy to connect all my accounts. I get a very broad look across the board of like how the business is doing, and it's very easy come tax time to kind of file a Schedule C with that. So that's a tool I really like using. And then specifically for the properties, I use Stessa. So if you go to www.stessa.com, it's a property management tool that can also be used for tracking business expenses as well. I separate out the business expenses completely from there because I already have that in QuickBooks. But this allows me to really get a very detailed view of the historical performance of my properties. It shows like there's lots of graphs and reports that can be generated, so you can really keep track of how your act's historically doing, which again, like I said at the beginning, is really important, because if you're not hitting the returns that you can hit by just investing in the stock market, then you really shouldn't be doing this, right? Unless you're doing it as a hobby, because that's effectively what it is, right? So I think it's really important to have the tools that allow you to measure at a very precise and historical way, so that you can actually keep track of either A, how you can improve to be more profitable, or B, like maybe this isn't the right thing for me. And it's really important to be able to kind of sit back and be like, hey, like we're not doing well in here, and kind of admit that, because I think that's something that's really hard for people to kind of do once you're all in this and you're like, hey, I've got a couple of these properties. It's actually not going that well, but like there's kind of this ego part of it too. And so I really think you gotta, look at the numbers and see if this is actually profitable. If it is, great, keep going. Look for ways to make it more profitable. And if it isn't, being able to like, hey, like let's have a plan to like maybe liquidate the portfolio and then put this into like someone who has more experience and is going to be able to leverage economies of scale to get more consistent returns without me having to do all this work. So I think that's really important. So Stessa is the tool there. I use the Google Suite for all of the like business internals. So for storage, email, calendar, all that stuff. And then I use Wix for a website, and then I use MailChimp for all the like basically like gathering all of the any sort of investor subscriptions, any mail lists that we generate, and also creating a buyer list as well. So we also do some wholesale properties, and we sell properties as well. So we have a buyer's list, and we're able to like directly target investors in specific areas so that we can get them off-market deals as well. So those are kind of like the key tools that I use that allow me to really keep track. My property manager themselves actually use their own set of internal software tools. In Texas, we use Appfolio, which anyone familiar with real estate would have experience with. Also, if you've rented from any sort of property manager group, they probably use that. And then in Philadelphia, we've used a product called Hemlane, which is a pretty cool modern property rental management tool.
Okay, got it. So thanks for going on the software in such detail, because again, you're in a startup business. So I think that's why the answer came out the way it came out. So no, that is awesome. I really appreciate you sharing those, because those are important pieces. Again, vetting the property management so they can run the day-to-day operations, and how do you overlook all of that is again through the software and everything. So it's beautiful. So again, talking about, it's going to be a little bit kind of wide question, but hopefully you can answer that. But again, Texas and Philadelphia, so those are the kind of the two markets that now you're looking for. So can you talk about, are you planning to expand in other markets, and what are you going to do with the current markets, and what type of deals are you going to be looking for? Is it going to be single family or multifamily? What you're going to focus on the most?
Yeah, I really like the single family. I know a lot of people kind of in their real estate investor kind of flow end up eventually moving towards like larger multifamily. I think there's like, we could have a whole episode on why that's a good idea to do. But I also think there's a lot of power if you're able to scale the single family and multifamily portfolio. I think that's also very powerful. One example is like you have a lot better liquidity with that. So like, for example, if I own a 1,000-unit apartment complex and I want to go buy a Corvette one day because like, hey, we've deserved this, we're going to do it at this point. I can't just go sell 2 units and like say, hey, I'm just going to liquidate this part and go, sell that. And what I'd have to do is find probably a very sophisticated buyer, sell that to them at probably a market price, because you're dealing with, another investor who's likely not gonna buy it at a premium necessarily from you. And then like there's just less liquidity in that. And then whereas single family, you're dealing with houses, and people get really excited about a home, and people will overpay for a home if it's in the right place. And so I think your profit per unit at liquidation point can be pretty high. It also gives you the ability to just sell 1 or 2 units at a time, so that you can use those funds as needed. It also keeps you from having to like perform this huge, massive 1031 exchange in order to avoid taxes on this huge property, which you then have to do a similar thing, roll it to another large property. So my plan is to continue to kind of grow at the smaller multifamily and single family unit kind of range. I've been moving more towards like triplexes and quads and duplexes just because the cash flow is better on there. And now that I've kind of established myself as a purchaser in the industry, I end up getting a lot more deals kind of organically. So previously I had to kind of work really hard to go out and find those deals and, just like work really hard to get those. And it had to be very perfect because I didn't have as much capital. So I was looking for steeply discounted, whereas now I don't quite have to get it quite as discounted. And I have people kind of bringing them to me because they know I'm a serious buyer and mean business. So all those things kind of like, just like in any other financial aspect, like it's this kind of financial momentum wheel that you continue to push and you continue to get rolling. And as that gets rolling, things start to, they really start to move faster and easier because of like how you built the foundation. Similar to like how as you continue to build more capital and the compounding effects of finance as well. So similar concept in real estate where it's like the more you get into it, the easier it becomes, the more deal flow you get, and the more opportunities you see from the start. So that's kind of what I end up continuing trying to do. I will, my goal is to get to, a number like 50, 60, 70 in the next year or two. And then at that point, we may look at some different strategies, but that's kind of the goal right now.
Yeah. Sell it to a fund.
Exactly. There are definitely some a lot more institutional buyers out there for these types of things. Especially if you have several in a certain area too, you can really leverage that. And that's kind of what a lot of the times what they do is they're going in there, they're buying a whole block and then they're just forcing gentrification in an area because they've got enough capital to do that. So I think that's a really cool model where you can kind of take over an area and you get this kind of exponential return on that because you're not only rehabbing and building up a market, you're able to also bring up a whole neighborhood.
Yeah. And it's good because when you're selling a portfolio, again, you can bury some of the kind of less performing properties, and it get buried in all these like 70 unit like deal, because these people, when they come in, they have the access capital available to sometimes even overpay, probably because I'm sure they do a lot of due diligence themselves. They kind of know what they're doing specifically going in these markets and buying those deals. But it's a tremendous exit strategy for somebody who acquired all these units themselves.
Yeah.
So again, talking about going fast, as you mentioned, and scaling faster, again, it's two ways. Again, leveraging the resources available out there. Again, the podcast, networking with people just like yourself. And that's, again, I want to recommend again, and I will recommend a third time before we're going to go to get in contact with Ross for more details about investing. But there's another thing is, getting in contact with the people who going through the process and, kind of drafting, from the success that they're having. And like one of the things that you have, like you offered the mentorship also for the people who want to, become part of the, remote real estate investing. So can you talk about what's in a mentorship and what do you provide for the people?
Yeah, so this is really just started kind of organically. One thing that I really noticed about hopping into the real estate industry is that it's really been a very like open and kind of it's a very like plentiful mindset in terms of like the people that I've found are involved with it, which is surprisingly refreshing. I think at first it's easy to like kind of suspect people like, why are you being so nice to me? But it ends up being a very friendly, pay it forward type of a world. That does end up helping you a lot of times down the road because you're building connections and things like that. But I do generally believe that a lot of people have a plentiful mindset and really are happy to help people out. And that's how I've taken the approach. I love getting on a call and talking with people about real estate and getting on podcasts discussing like this. And it just is something that I get really excited about. So I've been very happy to help people along the way with that, as well as they've talked to me, and that's kind of organically grown into different sorts of mentorship programs that I've done as well, where I've started actually kind of being the eyes in the sky on deals. So basically introducing people to boots on the ground, watching to make sure that deals, underwriting deals for them and double checking their underwriting, make sure they're not making a mistake here. And then walking them through the whole closing process, getting the renter in there, how do we get all your systems and setups so that you can do this remote investing, and then just being there to answer questions and kind of be, looking over their shoulder as they kind of walk them through it the first time. So that's what I started doing with some friends of mine, and then that's kind of turned into expanding into working with other people that I met through, on Bigger Pockets or on our Facebook group and things like that. And that has just kind of organically grown, and it's been really fun to kind of help people walk through their first investment and kind of see if this is right for them. And, at the same time, I always try to figure out what people's high level goals, because I'm not just gonna, push someone through a real estate deal just because I want them to do. I want to make sure that it's the best thing for them and lines up with their goals as well. So yeah, really, it's just kind of happened organically, and because I really love chatting about real estate and helping people on their journey as well. It's really exciting to see others succeed as well. So that's kind of a big way where I've been trying to get back at this point, and just helping others along the way.
Then that is very awesome. I mean, so people, again, for the third and the last time, definitely recommend for you to get in contact with Ross. And of course, there is Instagram, Facebook, Engineered Cash Flow, and the website that is called engineeredcashflow.com. And of course, Ross is available on Instagram too. I think that's how we connected. I think it was through Instagram. So this man is definitely available for you to get in contact and ask a few questions about, remote investing, because that's what Ross is mainly focusing in, at this current moment. So ask the questions, and become part of the mentorship. If you're really serious and you're looking to close on some deals this year, so definitely. So again, Ross, just want to say big thank you again for all the information, tips, strategies, motivation, and everything provided on the show. I really appreciate it.
Yeah, it was great being on here, and wish best to every one of you guys.
Thank you. I appreciate it. So before we're going to go, again, one thing that I wanted to ask, if you shared this episode with a friend of yours who always talks about real estate investing but never pulls a trigger, this episode is definitely going to be very valuable for that person. Again, as I mentioned, there's all these great pieces that will let that person to find and close on a first deal, remotely. So make sure to pass this episode along. Again, Ross, thank you again for being on this episode. And as always, I'll see you next time. Thanks,